Yeah. So what's the date? Today is Friday, 27, 2018. This is your daily Forex trading strategy session. Well, I'm not entirely sure. Do you see this? Do you see that? What do you guys see? Do you see the disclaimer? Yeah, okay, cool. Let me remind you that trading is risky. No. Not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. It's nice to meet you. Hello. My name is Wayne McDonell. I am the Chief FX Market Strategist for TradersWay.com. I'm here to answer your questions. Today we'll go through technical and fundamental analysis. I'll answer any questions that you have. The way I look at it is you're the boss, I'm the analyst, so I'm here to help you succeed. I'd like you to learn how to do your own analysis so you don't have to rely on me or anybody else to make decisions. In fact, maybe one day you'll manage other people's money and they'll look to you for the important decisions. So anyways, please visit TradersWay.com and become part of the TradersWay family. It's your way at TradersWay with Trader Wayne. You can choose an ECN account, fixed spread account, variable spread account, whatever you want, right? We're here for you. All right, so let's see if I click this, maybe this gets you to the desktop. Please confirm that you see charts. Type in the word charts. Yeah, all right, good. Wonderful. Thumbs up. So once again, I need to apologize. I am still sick. In fact, I think I'm worse. Gee whiz. But that's what happens if you spend 3 weeks at university and sleep hardly anything. You come back and your body collapses, I guess. Yeah, take the weekend to sleep it off. Yeah, that's so funny. Like, who has time for that? But anyways, enough about me. It's all about you. Let's go through our charts, align our satellites. This is euro dollar, and this is a great example of exactly what I teach over and 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 over again. I want you to make a decision about being a bull or a bear. Ideally, use long-term fundamentals, or you use long-term technicals, but you know if you're a bull or a bear. Okay. Once you've made that decision, trading becomes significantly easier because you know what you're going to do before you're going to do it. Especially if you've taken the swing trading course, you know how to put together medium and long-term trades. Right now, you know how to go for trades worth what, 100 pips to 300 pips. Cool. Based on those simple rules of engagement, a bear would sell here. Either of those or both of those, each of those. Yeah, that's fine. And opposite and equal to that, this is where bulls would buy. And we did identify this back on Monday. Cool. So if you had sold here, there's a pretty decent chance you made money. Remember, sell here, and here is not part of the plan. It's specifically this. That's what's in the book. That's what's in the plan. That's what's in the PowerPoint. It's what I've been teaching for 15 years. You definitely sell there if you're a bear. It's just by definition. It's just what you do, right? It's simply a setup that a bear would take. And then conversely, this is simply nothing but or nothing more than where a bull would buy. Right? So you can see on the smaller time frames, we had 2 or 3 little setups here for scalps. Okay, it just didn't pan out. We were hoping to be down here. Oh well, too bad, so sad. But the entries are still there. The opportunities are still there. You should still be short, or you still should have shorted that. And still probably made money, or certainly broke even, right? And then there's a chance here again as a bear, just simply to do again. So one of the things I try to get into the noggin here, the gray matter between your ears, is that you know your entries. Okay? You know your entries. What you don't know is the outcome. I don't know any more than you that it's going to go down here or not. But you know your entries. That's predefined, predetermined, obvious, simpleton stuff. We just don't know if everyone else is going to sell there, right? And same thing, this is simply where bulls buy. I don't know where it's going to go. I just know that that's where bulls would buy. And they did. Of course they did, because that's what they're supposed to do. But again, we don't know the outcome of it. We don't know how many bears. We don't know how many bulls, so on and so forth, right? But if you're a bull, you simply keep buying more bulls back, okay? I don't think you would have lost money here as a bull, right? Is it possible that bulls made money down here? Is it possible? Maybe not a lot, but what is that? You're buying it at 16 and a half and it went up 17 and a half. I mean, it's a 100 pip trip. I mean, right? But you're probably not losing. If it's giving you 100 opportunities, you're probably not losing. And it's a 100 pip trip this way. You don't know if it's going to break. You're hoping, you're assuming, but anyways. So if you'd just done what you were supposed to do, it didn't matter if you were a bull or a bear. You probably made money. You probably didn't lose money. And in this case, bears got lucky. It broke that way. Sweet. Okay, so really take a look at, guys. Oops. I'm going to do that. Loading, loading, loading. Shouldn't have clicked that button. Come on, software. You guys lost it, huh? You lost the charts? Shoot. Now they won't reload. Maybe if I just kill that whole thing. Try again. John, I did one a week ago. Or sorry, Jow. Sorry, Jow. I did one a week ago. All right, there we go. Yeah. All right. So anyways, go back, take a look at this chart. What did you know on Monday? What did you assume your direction would be? And how would you play it if you could do it all over again? Okay. And remember, nothing here tells you if it's going to break to the downside or break to the upside. Okay. It's just as likely to go up as it is to go down. So how do you play it? But again, if you play it right, it doesn't matter if you're a bull or a bear. The outcome would have been about the same. Okay. I love that. I love it. I love it when you see if bulls simply were good bulls and if bears were simply good bears, both people made money. It reminds me of a story of many years ago. I was invited to a hedge fund conference. I don't know if this conference is the right word, but there's about 100 of us, maybe 150, in New York City at a private club right off of Central Park. It was really, really, really cool. And it occurred to me when I was sitting in the room that everyone did something different and everybody probably made money. And I thought that was really cool. So then you start walking around and you're like, hey man, what do you do? I bathe in champagne. Oh, cool. Me too. Ah, what kind of champagne? Dom Rosé? Everyone in the hot tub, right? So, anyways, in that case, if you just hit the hub, didn't matter what you were doing, you would have made money or at least didn't lose money. And I love opportunities. Like I love break even trades and do them right, not ones where you move them quick because you're scared. But I love having the opportunity. You take a shot and you have the opportunity to make money, and you're able to remove that risk. Right? A free look at the basket, take the shot. Free look at the net, take the shot. You're not always going to score, but those are good opportunities. And to have opportunities is really what you want, right? Oops. All right. Kitty cat. Let me get rid of this stuff over here. All right. All right. So let's go through this. Technical analysis. Put this on red. All right. I'm trying to think about what we were talking about. I think we did this last week, even at this point of view. I think we did this down here or up here somewhere in this move last week. And so I just simply went back and said, hey, look. Okay, this is interesting, right? Do you think that would act as support or resistance if we were down here? Yeah, resistance. Now that's pretty long-term resistance. This goes back to June, mid-June. Then we see this last week. Does this add confidence or detract from confidence that it'll act as resistance? Yeah, cool. Now, nobody, or I certainly didn't know it collapsed that much. Okay, but then on Monday, we discussed the bearish engulfing nature of this daily candle. That was a 1-day candle, right? That's just ginormously red, right? We started up here and we ended down here, ginormous. So how do you set that up for a trade using Fibonacci? Well, you measure this and you look for a 382, 50%, 618 Fibonacci retracement, and you sell somewhere in here, right? Cool. If you're using pivot points, you want to sell somewhere in here. Okay. Knowing that you got a high, a low, and a close, it's a low close, right? So are you a bull on a low close? Oh, is that right, John? Yeah, okay. Yeah, you sell on a low close. So there's a lot going on here that would lead you to think, well, maybe, just maybe this will fall. Cool. Or your concern is we're range bound. That's cool too, because at least you're not aggressively doing it. Yeah. And what would your target be? 130.27. Oh, right there. How cool is that? So here's the problem. You were buying dollar here, and you're selling US dollar there. That's tricky. It's very tricky. So if you got tripped up on that, it's understandable. It's not your fault. I know 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 it's not your fault. How do you like them apples? All right. Tough week on gold. Tough week on gold. Is it getting better? Do you feel the same? Does it make it easier on you now? What do you think? Should you sell it here? It's amazing how people find it so difficult to sell up here. And how can you sell it? It's been going up. It takes a long time to get to the mindset to sell when it seems to be going up, right? Now, how do you make such a difficult decision to look to sell even though it's been going up for a whole day or two? How do you make that decision? It must be very difficult, right? No, but you would have to assume a double top before it occurred. Well, you guys are saying things like, well, it's resistance, so well, no, there's something before that. How do you assume that this could even happen before it happens? Because you are a bear. No, the 55 doesn't tell you anything. I mean, okay, sure, maybe a double bottom or something. You know, this isn't a good pivot on a weekly basis or a monthly basis, or there's not a lot of goodness here. You're just simply a bear. That's how you do it. So, like, let's say you're in the middle here. You would have had this as resistance, and you would have had this as support, right? If we were still right in the middle, if we were right here, you'd say, oh, well, there's my support. There's my resistance. We're range bound, right? So you're going to keep selling and hopefully it breaks, right? Or maybe you do something like this. Hey, you're like, okay, I'm going to sell it up high. Maybe it breaks and then pulls back, and then I'm going to sell again. But you're thinking about all kinds of things, but not what's happening now. It's irrelevant. You just want to know where your support and resistance is. So when it's rising, you're like, oh, sweet, because that's going to come up into my resistance, and I'm going to look to sell it. Okay. The newer traders deprive themselves of that kind of analysis. They see up, so they think up. They see down, so they think down. They're not saying, "Oh, look at the up. That's great because it's moving into my sell zone." But that's what professionals do, though, right? They're not looking at what's happening in the moment. It's all relative to their next trade. Okay. So yeah, so if you're a bull, there's lots of reasons for this to be support, right? So if I was a bull, I would think this is what's going to happen. That's what I'd be trying to take today. I don't know if I'll get the opportunity, but that's what I'm looking for, let's say here. Sure, John. That makes sense. Good with that. Start to set it up. You guys remember this one? This is pound. And we looked at the daily chart. We assumed somewhere up in here was the daily 21 EMA. What do you think? You guys remember it? So put it in there. Yeah. We had it going up, and then we had that as really the only resistance. There was no other resistance besides that. Well, that's not entirely true. There is resistance there. It's not really tradable resistance. I think it's more of a coincidence. But this line here is a weekly M3, and that is a sell. I think it's coincidence, but look how much coincidence it is. That's a lot of coincidence. Yeah, well, you can tell that because of the 200 EMA. Yeah, 1 pip worth of resistance. But the thing is, it's worth 100, right? Oh my God. Oh, I haven't slept in days, guys. Holy smokes. Oh. 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 Sick of being sick. All right, I'll keep going. But amazing. Anyways, right? I think there's a lot of things. Like, remember in the summer, you should be taking as much time as possible to reflect on trading, on how market behaves. If I were me, I'd be going back through like daily charts, okay, and asking myself some serious questions. Did you make 1,000 pips shorting this earlier this year? And the answer is, if the answer is no, why not? That's a valid question, isn't it? Right? I mean, how much do you need to worry about, scalping 1 minute candles and 5 minute candles and making 25 pip moves? Okay. I mean, let's get away from that for a second. I'm not saying it's bad. That is a part of trading. But isn't this more important? Like, if you miss this, it's like 1,300 pips, right? Isn't that the bigger question you should be asking yourself as you move forward into the second half of the year? Like, it's those bigger questions that I think you should ponder. Right? And then on a smaller time frame, ask yourself these moves. How effective have you been on this pair and others at selling at the 21? Okay. Selling at the 55. Selling at the 21. And these are basic rules that I do teach you. This tells you to be bearish and aggressively bearish. And this tells you to be bearish but conservatively bearish, assuming things like double bottoms. Well, how close is this to a double bottom? It spiked down for 4 hours to catch the weekly target and then went up. So it's been generally correct except for a 4-hour move, which did bounce, right? Is this a reload? Does this show us that we will break to the downside? Okay. And by reload, I mean, has the 21 EMA taken over from the 55 again? So here the 55 was in charge. Did the 21 take over again on the assumption of a new lower low? And is that the direction of the long-term trend? Because if it is, you're probably going to get luckier betting on the trend than against the trend, right? One trade at a time, Johnny. I'm trying to get you guys to have that business planning retreat with yourself. Something that, I did long ago, and I've told you on many occasions how important it is for you to step away from the charts of the chart of the moment and really focus on, your trading business, your trading career, your long analysis to look at these big moves. Okay? That's all I'm trying to get you to do. Just get yourself out of the moment and put yourself in sort of the bigger strategy. Boy, I'm exhausted. Okay. Still stuck in the range in Aussie. Okay. This is what I'm hoping will happen next month. Now, bear in mind, I did this at least a week ago, right? Right? Was at least a week ago I drew this, right? I don't think I did this yesterday. A week ago. What did I say? But that's what I'd like to do in August. I'd like to step back, look at the bigger picture. I would hope that would happen. Plan B would to have that happen. Okay, this would be better for me, but whatever. Let's do it that way. That'd be great. But that means I have a plan now, right? Let's do it this way. That would be great, especially if we hit it early. Okay. A plan. Now, if I have a pre-established plan, does it impact my thought process on these smaller moves? Could I buy it here? Right. You know what I think will happen? I think it'll rise here and fall here next week, and I'll buy it next week. Well, I can still take the shot here. I just doubt it. That's all. I can still take the shot. But this seems like a lot of resistance, doesn't it? But that's called trade planning, guys. I'm not talking about what's happening on the 5-minute chart and not worried about the news coming up. The reason I'm not worried about the news coming up is because of, let's go back to the 4-hour. If it falls, okay, let's say the news comes out and it falls down here. What am I going to do? Okay. If, let me zoom in a little bit more. Okay, if the news comes out and we're up here, what am I going to do? I guess technically it'd still be this. Yeah. So, like, why would I be worried about the news? If the news comes out and then I react, now I'm a victim of volatility, most likely. Now, I could scalp this up and then sell it at 82.50. So I could buy it at 82, sell it at 82.50, and then buy it again at 81.20 or even 81.50. I might buy it back. Yeah, maybe that might be possible, Chuck. You have to deal with it when it happens. But what's most important is what investors are going to do. Okay. So you're a Japanese investor, and the Bank of Japan raises interest rates to 0 or 0.25 or 0.5. Okay, those are all bold moves. Okay, does Japan have 1% inflation yet? They don't even have 1% yet? I thought they had 1%, but I've been out of touch for a month and a half. No? Annual, not monthly. Annual. Japan. Okay. Yeah, I thought it was closer to 1. Okay. So, first of all, should they raise interest rates to these levels when they don't have 1%? That's very debatable, right? But even if they did, let's say Japan jacked up interest rates to 0.25. Do you think the Japanese investor is going to um, change his or her mind dramatically and say, well, forget everything. I'm going to plow all my life savings into a JGB, paying me 0.25 a year? Okay. They could buy a 10-year US Treasury and earn 3%. Okay. You see what I mean? So, right, sure. So you have to make a decision, though. I'm just pointing out things you have to concern yourself with when making a decision. How much will the change in interest rate affect Japanese investors? So what decisions do they need to think about? Well, what's the return on their investment? What is their inflation level? Every retired person's first concern is to make enough on their retirement to pay for inflation. Okay? Because inflation above your growth rate for investments is guaranteed loss of money. Okay? So, they got to make at least that. But wouldn't it be nice if your retirement account would actually grow? That'd be nice too, right? Because if you had $100 million in your retirement account and it's growing at 1% over inflation, you have to live on $1 million a year and you'll never have to touch your nest egg. Therefore, I highly recommend you retire with $100 million in your retirement account. It's the best way. So anyways, those are the types of questions fundamentally you should ask. Will this change the way people invest their money? Because that's money flow. Okay, we're talking about, will the change in rates in Japan change the way money crosses borders? Will the political rhetoric change the way that money crosses borders? If they're talking about war, does money cross borders change? That's rhetoric. Maybe not. If missiles are in the air, most definitely, right? Big concerns in the world: the use of the U.S. dollar, the use of energy products like oil. That's a big deal. So what gets the flow to change? Okay, that's what we're concerned about. And oil is a great one to start with because it is a real commodity. It's based on real supply and demand. Gold is different, right? Like there are gold bugs that buy gold simply because they want to buy gold, or people buy gold because they think it's the end of the world. And I'm like, really? So you own gold futures and you're going to trade your gold futures contracts when the world ends? Right. Well, I guess you have to own physical gold, but now you live in a bunker guarding your gold all the day. So that one to me is a little stranger. Oil is oil. If macroeconomics improves, that means if businesses are in business, expanding their business, they're going to need energy. That's like sort of a real demand. And then there's real supply, like how much of this stuff can we pull out of the ground, put into the supply chain, refine into a product, and then sell inevitably to a business that either needs plastic or crude oil or electrical energy or fertilizer or jet fuel or gasoline or. There's a lot of things made out of oil. So when demand for oil goes up, that's usually a really good sign for macroeconomics. And those are the real big things that we need to know, because if the business world globally is improving, then demand for all kinds of things improve. And it doesn't have to be just demand for physical commodities like iron ore and coal and wheat and wine and stuff, but it's things like art and real estate and just business transactions, often done in US dollars. This is the stuff that we need to concern ourselves about a lot as currency traders, and these are the things you should be pondering. So that you can sit down with a potential investor and say, you know what, I've been pondering this rhetoric coming out of the Bank of Japan about changing inflation targets and maybe adjusting interest rates there and quantitative easing and such. And it brings up some pretty serious questions like, what is the real inflation rate? What in Japan, what is the real growth rate and likely growth rate of their economy over the next 5 years? You know, when or how can they address some of their demographic issues, and will that change the value of the Japanese yen in the near term? How will Japanese investors, invest and manage their money over 5 years? John says, I think Japan is actually deflationary. Let me give you 3 reasons why. Boom, 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 boom. And what these things mean to me is that in a deflationary Japan, I think we should invest money this way, and this way. Okay? I'm exhausted, guys. I'm ready for a nap. I'm telling you. Thank you. He spent. I'll see if I have a couple more done. There, right? Might as well get her done. Cool. Okay. So, as always, I don't know if it's going to go up or down, but if I was a bear, I would look for opportunities here and I'd look for opportunities there. Easy, right? Well, but Wayne, it's been going up since Tuesday. Yeah, well, if you're still chipping away at this price level, right? Thank you, trade plan. Okay. I'd be waiting. I'd be watching. How easy is that? As a bear, I would say this is going to happen. If that doesn't work, then this is going to happen. If that doesn't work, take a walk. It gets more difficult if you're trying to decide whether you should buy it up and then sell it down and buy it back and then sell it down. There's so much more clarity. Like, well, this is just simply resistance. So therefore, I do technical analysis to determine whether I sell here. But because I'm bearish, I want to sell here. Look at my target. I actually identified this, what, 2 weeks ago? Is this more likely to be the bottom? Even though this is what I want, this is more likely. So that's still there. So much better of a week, huh? Where you just kind of know what you're going to do. And if you don't get that, then you don't trade. Kind of puts you in charge. You're not in control of the market, but you're in control of your behavior in the market, right? So could we isolate this a little bit and just say this is sort of a bottom? This is some sort of top. We could trade it like this, couldn't we? If that occurred, how would you feel about something like this? How would that make you feel emotionally? Yeah, but shouldn't your trading feel hot? That's where we're trying to get to, right, guys? And I guess if you're like, well, Wayne, I'm a bull, then you should ask yourself the tough question, like when it's sat here for days at the support pivot, okay, maybe you didn't buy this one, but there was a breakout and retracement. Like, so why didn't you buy that one, right? Like at some point, if you're a bull, you're at a support pivot and you're watching it, you know, like for example, um, what is your MACD doing? So let's draw a MACD here. We do MACD, that's top, bottom, middle. There's the water line. Okay, so MACD, up, shoot, up the orange hand. Okay. MACD is up, and then crosses down, down, okay, there's the MACD. I can draw the red line too if you want, but whatever. Okay. So you'd sit and you'd wait. Okay. You have two choices. You can scalp off the top if an opportunity, maybe on a 1 minute chart or a 5 minute chart, or take the breakout retracement. That's your MACD. Can anybody check CAD yen? Bet you'll find a right. I took brandy and Benedictine last night. That was good. All right, so let's just go to the buck chuck.
Ahead of this data, the U.S. bond market prices, the 10-year at 119.09, the low was 119.08, and high 119.12. The two 10-year spread at basis points. Just note this 7 10-year spread now separated by about 4 basis points. That would likely where we could potentially see the reverse inversion on any wild print in GDP. In the 2-year, the 2.67% is up on the day, while the 10-year is down fractionally heading into the data. Also worth noting in terms of the Fed Fund futures contracts, the December 2018 contract at 97.77 is unchanged. The January 2019 at 97.67. So again, we're fully pricing in another rate hike in September and putting at some odd on a potential 4th rate hike in December.
Just a minute to the GDP data. It's like advanced reading. Again, yesterday, White House Economic Advisor Kudlow said that this number will be big. And President Trump also.
By the way, I've been telling you this number
could be a 4 handle.
4 or 5 months would be big.
3.8 or 3.9%. reading would be okay, said Trump yesterday. And headline expectation for GDP is 4.2%. Personal consumption expected 3.0%. GDP price index expected 2.3%. Core PCE quarter-over-quarter expected 2.2%. Watching the TE data for its impact on the Fed inflation policy. Half a minute to the data, GDP headline expected at 4.2%. So looking for backward revisions on GDP data today.
About 4.8.
Prior quarter was 2.0%. Q2 GDP data in just a few seconds. 4.1%, 4.1% lower than expected. First quarter up 0.2 to 2.2%. Personal consumption at 4.0% is 1 percentage point higher than expected. The back quarter revised down to 0.5% from 0.9%. GDP price index at 3.0% is 7 times higher than expected, with the back quarter revised down 0.2 to 2.0%. The core PC at 2.0%, 0.2 lower than expected in the Q2 number. Q1 revised down 0.1 to 2.2%. Again, headline GDP in Q2 at 4.1% is 1/10 lower than expected. Consumption much higher than expected at 4.0%. Price index at 3.0%. And core PC 0%. The back current revisions 2017.3%. Core PC price index for 2017 revised to 1.7.
And Chevron here in the last minute reporting revenues that were slightly ahead of consensus expectations at 42 billion. The $1.78 was a slight miss. Overall reaction to the data is somewhat muted. We're seeing a little bit of buying at the long end of the curve. The 30-year up 5 ticks, the 10-year up 3 ticks, 296 in the U.S. 10-year, and the 2-10-year spread falling back to 29 basis points. The dollar index largely mixed as well.
See, back in the day, I'd be up 250 pips by now. That's why I scalp news a lot less than I used to. So like I said a couple of days ago, GDP is not something that misses that widely or shouldn't miss that widely because you have all the data. You can just do the calculation. You have the C, you have the I, you have the G, you have the net X. Okay, this is the line in the sand. 2 minutes from now, you should be able to move your stock to break even if it breaks. If not, you're able to get knocked out. I'm glad we knew this would be an area that would be trouble, huh? So the consumption, it was much greater than expected. Wasn't consumption at 4%? Yeah. That could be really, really good. That would be the thing that brings us down. reason for that is consumption is going to lead to a higher GDP in the future. What percentage of C represents the U.S. economy? C equals what percentage of GDP? Yeah, 70. So a big C is a big deal. No, but I just said it too, John. It's this situation here where you take the charge at the line of the sand, and it either collapses or it breaks. It's the point where you should be most concerned. Okay. Let's kill this and let me turn that off. Then, you know, we're just caught in this nonsense. It's nothing. Like, let's put it this way. Forget about the news.
A commentary from Putin was saying that the
Hang on.
existing START missile treaty will end in 2021.
All right. So let's go back to this chart. Forget about news now. Okay? Forget about news. All right. A bear would sell here, and a bear would sell here. Okay? A bull is going to buy here. And then, of course, if that fails, I'm sure we can find another place that a bull would buy. So we gotta go out a little further. Oh, this one. All right. So let's go back. I did this before the news. Okay. So a bear is going to want to sell here or here. A bull is going to want to buy here or here. Any questions? Yeah. Well, John, you're supposed to be in before the break. John, you know my scalping technique, right? My high volatility event driven strategy. I just assume. No. I've been teaching it for 15 years at non-farm payrolls. Sorry, no, 12 and a half years. 12 and a half years I've been teaching people. Like over 100,000 people have attended that webinar. Wow. All right. Well, there you go. So there was a chance there. And then when I said, when we're at the line, this is where it's going to collapse or break, time to kind of manage your stops. But to go back into here, hang on. Let's go back in. 1 minute. Yeah. So I had it set like this, right? So based on that strategy, you should have been in around here. Then we were up here, and I said, this is where it's either going to break or collapse. This is where you should be thinking about moving your stop to break even. And then it collapsed. Okay, well, it was either going to do this or it was going to do this. But we knew that. That's why I said it. The other flip side of that is you can wait, because we know this is not a place to buy. That's why you need the retracement. This is the place to buy, but it's just a high volatility strategy, right? It's just a continuation, but you know you're vulnerable to collapse. That's all. Well, okay, and that brings up another point. We were expecting what, 4.2, and we got 4.1. Should the value of the euro dollar change dramatically based on this information? So, so we said this before the news, and I think I'll end on this one. What I had said before the news was that there are two places a bear will sell and two places a bull will buy. How much dramatically will the news change that? I don't think I did it on this this pair, but I think I did it on another pair. Because someone said, "Oh, well, then the news messes you up." I'm like, really? How often does the news really mess up your trades when you just back out a little bit, right? Very little, I think. Now, sometimes there are surprises, but I don't know. It doesn't have to mess you up all the time. What I like to think, like, here's this. I want the dollar to weaken, and I understand that the dollar has unbelievably high interest rates relative to the rest of the world. I still want the dollar to weaken, which means I know I'm a bull. I just don't know when. Okay. Oh, my pleasure. Well, thank you, John, for being a client of TradersWay. We appreciate you. But I'm telling you, there was a time in my life where GDP would come out and we'd be up here by now. Yeah, well, it depends on what we mean by that. But so I tend to scalp the news a lot less than I used to. It used to be a big thing of what I did, because in the first minute or so, even if I got it wrong, this would have been up 50 to 100 pips, and I would have jammed my stop, and I still would have made money. This seems to be more often the case with what happens. But just remind yourself, bears are going to sell here. Bulls are going to buy here. That's why I put those lines there. Well, John says 2013, but I even remember more like 2010, 2009, maybe even, yeah, I guess 2009. I offered a service on FX Bootcamp for maybe 6 months where I would schedule what I thought the most important news events were for the week and really for the month. And subscribers would join me, and we would scalp the news together. But we got a lot of this stuff, and I'm like, yeah, you're saying that, yeah, but the moves back then were like 25, 50 pips, and it wasn't 150 to 250 pips. Like non-farm payrolls when I first started would rise 300 pips in 1 minute and then fall 250 minutes the next minute and then maybe be up another 400 pips and then back down. Yeah. I remember one time I was buying Japanese yen. I think I was selling the USD yen. And we were making like hundreds of, let's say 100 pips a minute. And it was on that one particular trade, but we had been making the trade for several weeks. I think it was 115 I had a target. And I remember talking about whatever it was, 115, 105, whatever it was, but let's say 115. We were heading down to 115. And I'm like, yeah, this is where Japanese CFOs have priced in the value of the Japanese yen for the rest of the year. Anything below that, it's really going to mess them up. And it's really difficult for a CFO when, of a multinational corporation, when the value of your currency is dramatically changing day by day, and you're trying to forecast for the year. So anyways, so we were selling, and that particular day, just sort of scalping, and scalp, make 100 pips, retrace, scalp, make another 100 pips. And then I scalp, we hit the 115, and then it went 114, 113, 112, 110, right? Like all of a sudden, I was up like 600 pips in 4 minutes. And I'm like, out, take profit. And there was no market. There was no market. No one would take the other side of my trade for me to get out. So then it came back up, and I'm like, get out. And then finally it came up about another 300, 400 pips. And finally I got out for only, 400 profit, but I was up 800 pips. But in the matter of a minute and a half to 2 minutes, I got slipped 400 pips because there was no market. 400 pips slipped in 90 seconds. So anyways, and here we are now. All right, well, I think that's enough. I need a nap. I put on a nice shirt for you guys. I got up nice and early. I showered. I drank 2 energy drinks, 2 cups of coffee. Did all my stuff for you. But I feel like shit. So anyways, I think I'm going to go take my 9 a.m. nap. I'm going to have a lot of work to do. I got some family stuff to do. Yada, yada, yada. But as terrible as I feel, sorry, here it comes. I do appreciate you, and I hope you know that. And I never quit on you, no matter what the situation. I felt like quitting on you today. I really did. My throat here is on fire. It hurts to talk. I coughed all night like I haven't slept. I haven't slept in days. So it would have been very easy to sleep in my beautiful Tempur-Pedic bed in my dark room since the sun hadn't even risen yet. But no, I got up, and I got up for you. You make me want to be a better trader. I've been doing this a long time, and having you on my side and having you on my team keeps me sharp, keeps me focused, and I appreciate that. I thank you for that. So go have a wonderful weekend. Please review your charts. Take this time of year; it's precious. I'm telling you. In 4 weeks, it's going to be too late. You won't be in this situation anymore. Go back, look at your charts over the last several months, maybe over the last year. What happened? What were you doing a year ago? What are you doing now? What positive changes have you made? What could you have done better? What do you want to do better in the next 6 months? Really have that opportunity to mentor yourself. Okay? That's what you should be doing over the weekend. Okay? I hope so. So, again, peace out, guys. See you on Monday. Thanks again for being clients at TradersWay.